Hello viewers, this is Vivek from Quantitative Learning, and today we are going to discuss trading as an art or science. Navigating the markets with logic and intuition. And my organization name is Quantitative Learning. So first we will go into this introduction and the great debate. So defining the term. First we need to understand the trading. This channel and most of the videos and discussion what I do on this channel are regarding the trading. People who used to trade in financial market. This may be like equity, crypto, commodity, or other financial assets. So first, if anyone is new, for the new viewers or one who don't know about the trading, for them, we need to understand trading, the buying and selling of financial assets to make a profit by analyzing market trends. So this is what the trading is. It's very basic. If you don't know about it, obviously this video is not for you and you can skip this. So trading as in science. How trading is a science? A systematic enterprise that builds and organizes knowledge in the form of testable explanation and predictions. So this is the definition of the science. And why I'm going to discuss all those things here? Because I am this industry, I am a trader, and I interact with so many traders, and all these people, there are a noise. Yes, it's a gambling. So this is why I thought I should discuss this topic. Is a science, art, or people used to say it's a gambling. So what is science? Science is a very simple, a systematic enterprise that builds and organizes knowledge in the form of testable explanations and predictions. So science, what is saying, is something that we can make and we can test it. We can make certain rules, we can test it, and accordingly we can do the predictions, the future predictions. Is what the science is. And what is the art? The expression of applications of human creative skills and imagination, often involving intuition and subjective judgment. So the art is very simple. It's our application of human creativity and imagination. And what the trading is, so market is a very complex system that cannot be fully explained by a single formula, leading to the ongoing debate. While we are trading and in the stock market or any financial market, you can't fit into one frame like it's a science or it's an art, because anyhow the people who are behind, they are the human beings, one who is taking the decisions when you trigger the buy sell button. Trading as in science. First, we will try to understand why the trading is in science while we are buying or selling. So, the objective analysis, data analysis. The market is made up of numbers. It may be random, right? But it is made up of numbers. While we are buying and selling, we enter the numbers. So, obviously, and this is a huge number of data, right? We can analyze and we can understand every tick, trade, and transactions that can be harnessed for smarter decisions. And this is what the big funds are doing. Technical analysis, utilizing historical price data and chart patterns to identify potential future movement. This is what a lot of people doing now these days. You will see the candlestick charts and patterns. Fundamental analysis, involving crunching annual reports, tracking news, and evaluating a company's underlying value. Objective inputs, relies on facts, numbers, and logical framework to inform decisions. So, trading as a science, part one. The data. Trading as a science, part two. System and risk. So, first, what we understood was it's a huge amount of data that we are analyzing, and we are taking the decision based on that. So this is how it is a science. Part 2 is system and risk. So trading as a science, system and risk management, algorithmic and quantitative trading. It is a mathematical model and computer programs automatically execute trades based on predefined rules with minimal human discretion. And this is how these algos now these days are working. Risk management employs Stat- uh, statistical methods like value at risk VR, position sizing, and a stop loss mechanism to preserve capital. So even these systematic or algorithmic trading boards, they use the risk management. Backtesting. Strategies are tested on historical data to verify their effectiveness and identity flaws before using in a real capital. The goal of the scientific approach is to create a repeatable and verifiable edge. The human element, trading as an art, the discretion and intuition. Most of the retail trader, the trading is an art. So intuition and gut feeling. Experienced traders often develop an intuitive feel for the markets that goes beyond the pure data. This is often a result of implicit personal learning and experience. This is what happens if there are people or traders who are there in the market for so many years, and even if in a personal life we may use this intuition and we do have intuition and that sometimes work best. So those experienced people and most of the retail traders, while they take the decision, this is a decision based on intuition only. They don't use any framework. The rare of them, I have met so many people. Even if you analyze the data, then 99.9% are like that only. They take the random decisions. Multidimensional thinking require a piecing together seemingly unrelated inputs, which demands creativity and imagination. Adaptability. Markets are dynamic and complex, often moving in unexpected ways, black swan events. An artist trader can adapt with unforeseen conditions when a rigid system fails. So science or making an algorithmic trading doesn't mean that that's going to make a lot of money, or that it's something that's going to create, or that is any system, even it's a systematic algorithmic trading cannot work in every market conditions. But the human element, one who has a discretionary decision making ability, so they can adapt, they can change the like positions, or like it's there. If as a trader you're thinking the market direction has changed, so you can take the decision quickly because you are a discretionary one. So these are the art form of trading: intuition and gut feeling, multi-dimensional thinking, and adaptability. So as an individual or discretionary trader, we can do all those things. And part two is trading in psychology. So behavioral psychology and emotional control, managing fear, greed, overconfidence, and regret is crucial for success. Cognitive biases, awareness of biases, example full confirmation bias, loss aversion, herd instinct, help traders make more rational decisions. Discipline and patience, the ability to stick to a plan and wait for the right opportunity, often in solitude, is a key characteristic of successful traders. Mastering the psychology of trading is a continuous journey of self-discovery and self-awareness. Seems more spiritual. And traders are more spiritual than anyone spiritual thinkers. The synthesis, a balanced approach. So, what is the conclusion? What's synthesis? A combination of both. So, successful trading is not an either in a sign like either or scenario. It is a synthesis of art and science. Science provides the framework, the S, and there is control. Art provides the judgment, adaptability, and emotional decision to execute the plan, especially in real and volatile conditions. The result may look like art to outsiders, but it is built upon the craft and the science of hard work, systems, and emotional mastery. The balance approach, this is what a trader should be, a real successful trader. We should not, so we have to combine both the elements of the market, science as well as art, and when we combine both the things, then we become a like successful trader. In case studies, purely science example, highly successful quantitative response rely mostly entirely on the algorithms and data science to find the S and minimal human emotions. Purely art, traders who rely solely on the spontaneous emotional response to the stimuli often quickly fail. Balanced master example. A veteran investor with decades of experience uses robust systems, science, but applies a general abstract philosophy or portfolio level risk management. This is the balanced master example. This is what I like very much. So as a trader, we should be combine both the things, and framework is especially it's a science. And while we are after like taking the entry and exit, and we are there are so many things we manage our psychology, so that obviously is an art. The conclusion: mastering the craft. Concluding the infinite game. Trading is a game of probabilities, not certainties. The goal is to maximize your gain expectancy and stay in the game for a long term. Success requires a blend of rigorous analysis, science, and self-awareness. Discernment is an art. It appears to be as art to those who have not worked here enough to master the craft. A quote often attributed to relevant to the trading. So this was for this video, and the summary is trading is neither purely an art nor the pure science, but rather a blend of both with elements of craft and a game of probabilities. A successful approach combines the systematic, objective analysis of science with the intuition and behavioral mastery of an art form. So this was the summary and this was the conclusion. People who used to ask, is it a science, is it an art, or is it gambling? So you need to understand, if you are go through this video twice, thrice, and understand what it is. So this was for the day. Tata, bye bye, see you.